is in full swing in India, as is elsewhere. Earlier this week, we heard from Mindspace Business Parks REIT reporting a 9% year-on-year rise in net operating income. Revenues, meantime, rose more than 10% in the June quarter. For more on what lies ahead for this real estate investment trust, let's bring in Ramesh Nair, who's the CEO of Mindspace REIT in India. Ramesh, lovely to have you on the show. Thank you very much for your time. First, outline the performance of this quarter and how are things shaping up for the foreseeable future for your investors watching this story, watching the potential of REITs in India.
Thanks, Tanvi. Good to be back on your show. We had a good, consistent quarter once again. We did 1.1 million square feet of leasing. Occupancy went up to 91.1%. NOI went up 9.2% to 496 crores. Revenues went up 10.6% to 620 crores. Distribution went up 5% to 300 crores. We also announced a new project in Navi Mumbai, 1.5 million square feet project. The re-leasing spread was 24%, which is, again, a good indicator that the market is going up, rentals are going up. And our in-place rent has touched $70.
Right. I guess I have to start off also by asking about the pressing issue, the changes in the union budget and how that impacts investing in REITs, because the holding period has been brought down, which brings you under the purview, I'd reckon, of the long-term capital gains tax. And I think there is that element belief that because REITs are high dividend paying with added to the share price appreciation, that it makes for a very attractive investment opportunity for investors. And so to that extent, how do you feel about it being brought under the taxation purview?
Absolutely true, Tanvi. The holding period was for long-term capital gains was brought down from 36 months to 12 months. There were 3-4 other requests which we had with the finance ministry, which could be considered in the future. The other was classifying REIT as a equity instrument, allowing input tax credit under GST for under construction procurement, allowing REITs to borrow from banks, allowing REITs to borrow from external commercial borrowing. So these are some of the things which the finance ministry could consider for the future. But this announcement of reducing the holding period, definitely a big positive for the REIT industry.
Right, and so what kind of flows are you expecting going forward into the REITs market in India? How do you see the market evolving as a whole?
See, the market from a real estate standpoint has been outstanding. The first half, which we saw, the first 6 months of this calendar year, is the best ever first half. In terms of gross leasing last quarter, the market went up nearly 45% to touch 18 million square feet. That's the best performance by any office market across the world. Net absorption again went up 37%. This is clearly being driven by global and domestic corporates expanding in India. And it's, I think it's a clear indicator which shows the strength of India's office market and also the potential of the office market.
I do also want to get your sense, Ramesh, on what's your overall view as far as the real estate market, the property market in India is concerned, and the kind of investment that's going there, housing for all being a pet project of the government, affordable housing that too. Where is the focus for you specifically, residential or commercial real estate, and how are both those segments faring?
As Mindspace REIT, we focus on office. Overall, the real estate industry is around a $300 billion industry and employs close to 7 crore people. It's the second largest employer after the agriculture sector in the country. So it's a very, very important sector. On the office front, what we are seeing, Tanvir, is in the last 4 years, we've seen global capability centers take nearly 80 million square feet in India. And it's all kinds of GCCs. Technology is around 50% of that 80 million square feet. We have banking, financial services, global capability centers, engineering GCCs, consulting GCCs. So that's huge. Just in the next 2 years, it's estimated that the demand only from global capability centers for office would be anywhere between 45 to 50 million square feet. So India continues to score high on the talent cost, and India continues to score high on real estate costs when compared to its Western and Asian peer countries.
Right. And how deep can this market get in terms of more REITs getting listed?
Definitely, there will be more opportunities for REITs in the country. Today, if you look at the listed REITs, it's just about 100 million square feet. That number can significantly go up in the future, given that India has close to 800 million square feet of office stock, of which around 400 million square feet is REITable.
I do also want to get your sense in, Ramesh, on what more can, while of course you've had some support through the taxation policy, what more are you seeing change in the real estate landscape in India to get into the property space? And why would people prefer REITs over direct property exposure? How does that fare in terms of exposure to one's portfolio?
So if we look at REIT as a product, the biggest advantage is you get dividend and growth. Look at our REIT since listing in August 2020. We have given an annualized return of close to 12.4%. Half of that approximately came from dividends, and the other half came from capital appreciation of the share price. So I think REIT, given the current market volatility which we are seeing on a daily basis, whether it's in terms of income growth, which a REIT can offer, and in terms of reduced volatility, is something which all investors should look at in their portfolio.
And on the dividend payout front, what sort of dividend payout can you assure investors?
We don't give forward-looking statements, but I feel given where we just announced a 5% dividend, which is a 300 crore dividend payout. But given where we stand today, from a NOI growth point of view, our vacant area leasing, which is close to 2.3 million square feet, that's going to get us around 190 crore NOI. Our area under development, which is close to 4.4 million square feet, that's going to get us a 430 crore NOI growth. Our future development, which is around 3.8 million square feet, that's going to get us around 360 crore of NOI growth. So that totals to 960 crores of organic growth opportunities. This excludes obviously the rental escalations, which is typically 5 to 6% every year, and also the mark-to-market opportunity. So again, on the inorganic side, we have ROFO assets. Our sponsors currently developing a pipeline of close to 15 million square feet. We have another 2-3 million square feet with our landlords. So lots of opportunities to grow over the next 3 to 4 years, Tanvi.
Thank you, Ramesh. Thank you very much for joining us and giving us your perspective on the markets and your business plans as well. We'll be right back in a bit.